G'day guys, Seeney here. It's a lovely day up here in Queensland and we are talking about their crazy land tax laws. So thank you guys so much for watching. Please make sure you like and subscribe to the channel. It really helps to get these videos out to more people. Let's get to the part. So we are talking about Queensland's land tax laws, which have vast ramifications for investors. So we're going to look at what that means for you if you own property in Queensland. We're going to explain the land tax laws, explain what I'm doing, we'll explain why they're shit, and we'll go from there. So we'll start with the explanation. So these land tax laws are something that the Queensland government has introduced in an attempt to hopefully alleviate the pressure on the rental market at the moment. So basically the proposal, which is now going to be law, is as follows. If you own more than $600,000 worth of land in Queensland, you'd be paying land tax. Now that used to be the case, but now that has been broadened out. So even if you don't own more than $600,000 worth of land in Queensland, it's actually being ported to the value of your land across the entire country. So let's say you only own $200,000 worth of Queensland land, they're actually going to tax you as if you did own $600,000 if you own other properties around the country. That's going to contribute to that $600,000 figure. So the important thing to remember is that although you might have a property that's worth $600,000 or $1 million in Queensland, that doesn't automatically mean that you are going to be paying land tax straight off the bat, because it all depends on the value of the unimproved land. So the valuer general, he comes out and they'll give like a figure of how much they believe the land is worth, which is usually well below market rates. So even knowing you bought a piece of land for say $400,000, the valuer general might come back and say it's actually worth like $280, and that's the figure that the taxes go off. So even knowing you might own more, in some cases you might not have to pay the tax if this is looking to potentially affect you. So let's go through at what this law actually is. So we've got some different brackets here regarding the Queensland laws. So we have from 0 to $599,999, you're not paying any land tax. However, if the value of your land, and this is all investment properties by the way, nothing to do with your primary place of residence, if that is over $600,000, that includes all states now. It's not just New South Wales or the value of your land in Queensland encompasses everything. You're going to start to pay tax on that. So this has some big changes for people, especially if they own a lot of investment properties in a state. They're going to start taxing you on the Queensland component. So $600,000 up to $1 million, you're paying $500 plus 1 cent for each $1 above $600,000. And then on top of that, if your land value is $1 million to $3 million, you're paying $4,500 plus 1.65 cents for every dollar more than $1 million. $3 million to $5 million, you'll be paying $37,500 plus 1.25 cents for every dollar over $3 million. And then we're starting talking the big leagues now. If you own over $5 million worth of land, all the way up to $10 million, it's $62,500 a year plus 1.75 cents for each dollar over 5 million, which is pretty significant. And then on top of that, you've got 10 million. And I think if you have more than $10 million of land, I don't know why you're watching this channel, but regardless, you're paying 150 grand a year plus 2.25 cents for every dollar over 10 million. So it is a significant change, and a lot of people are going to be paying a significant amount of money. So why are they doing it? I guess they're hoping that they can relieve the rental crisis by taxing the people that are building additional dwellings to disincentivize it. I mean, to me, that makes perfect sense. I don't know if it makes perfect sense to you, but that's what they're doing. It's certainly a government that has wasted a lot of money with quarantine camps and things like that. And I guess, they got to try and get the money back somehow. So it just doesn't make sense to me, because if you're trying to alleviate a rental crisis, you want to incentivize people to continue to invest. Like, to me, that just makes sense. And the other thing that's really frustrating about this is that they're broadly trying to determine national policy, which it seems a bit strange. You know, they've unilaterally decided that they're going to take into account all of the value of the land all around Australia that people own to tax them on the Queensland component. So rightfully so, some of the other states have been, I guess, a little bit fraught with what's going on there and have refused to hand over data. So we'll see what happens in some of the other states, because it's going to be quite difficult to enforce if that's the case. It's all kind of going to come down to self-reporting. So we'll see if they can actually enforce the law. So what should you do? Well, you know, that's entirely up to you. I'm not going to give you any financial advice, but I can tell you what I'm doing, and it doesn't really change my strategy too much. Good areas are good areas. You know, we're just talking about tax outcomes here rather than you know, actual investing. So the important thing is to continue to buy quality properties in quality areas that are going to continue to grow. So looking at you know, basically what's performed in the last 20 years. Whatever's performed well in the last 20 years is probably going to perform well in the next 20 years, because people are going to continue to want to go to those areas and be around those areas. So looking at the inner rings of cities and the middle rings and kind of as close as you can get to where all the action is. Of course, it does depend on strategy as well. You know, whether you're trying to go for cash flow or capital growth, there's a lot of different things that you can take into account there. So, you know, you just got to stay par the course and not let this affect your strategy too much. If it no longer makes sense to invest, then, you know, there's a lot of other states around that have great places where you can buy properties. And going forward, I'll even be looking internationally, because this law does not encompass real estate overseas. So there is plenty of opportunity in places like the US, where they don't make it too hard to invest, and it is possible to get loans through US banks. The process is obviously a lot more tricky than what you would do being an Australian resident in Australia, but it is possible and you won't get taxed. So there's plenty of opportunity all around the world. So I think that's pretty much it. If you guys have any thoughts on what this land tax law, and whether you think it's good, whether you think it's bad, I'd be keen to hear your comments in the comments section. So thank you guys so much for watching. Please make sure you like and subscribe. My name is Seeney, and yeah, I'm away for weeks, so this is all you get. So see you guys, and stay tuned for the next video.